welcome to this video. This is 1stusFx, and in this video we're going to be teaching you how to identify fair value gaps, or what some persons call inefficiency in the market, what some persons call imbalance. Now whenever you see price action, all right, so when you look on your screen you'll see candlesticks. Now whenever candlesticks are formed, they are usually formed with highs and lows and open price and closing prices. Now, what is a fair value gap? As the name implies, it means that it's a gap that has been printed in the market. Now remember that every time the market moves, let's say in an uptrend, we're supposed to have higher highs and higher lows. And for us to have that, there has to be what? Retracement. Alright, so basically what you see is that previous resistance becomes what? Support. So this previous resistance becomes support here, this previous resistance becomes support here. So price keeps rebalancing itself after every break of what? Structure. So but when you see a series of candles just like you see on the screen, these are a series of bullish candles, what you would notice is that there's usually a gap between, let me advise, so this first candle's high and the third candle's low. So we see this gap here. This is what we call a fair value gap. This area is what we call a fair value what? Gap. So a fair value gap is simply a gap that is formed in the market that the market needs to rebalance itself. So price has to come back to mitigate this what? Gap. Price has to come back to mitigate what? This gap. So a fair value gap is always formed by 3 candles. So we have the first candle, which is this, then we'll have the second candle, and then we'll have the third candle. When there's a gap between the high of the first candle and the low of the second candle, that is what we call a fair value gap. In some other video we're going to talk about the different types of fair value gaps, but this is basically what a fair value gap is. So when you come to your charts, you'll see a lot of them on the market. We're going to talk about which of them to use and how to use them subsequently. So take for example, this is a fair value gap. See, from here down here, it's a fair value gap. That's a fair value gap. Can you see that? This is also a fair value gap. This is also a fair value gap. Right here. Okay, now you'll notice that, let's take for example this. If you come here, there is no fair value gap here. So between this low and the high of the next candle, there is no gap. So there is no fair value gap here. The next fair value gap we have is just around here. This, the low of this candle and this high. So that's our fair value gap. So basically this is how to identify fair value gaps on your charts. Hope this video was short enough and was well understood. Make sure you watch the next video on the different types of fair value gaps and how to use them. Alright, so till next time, make sure you like, subscribe to this channel, and ask your questions in the comment section.